Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have sluggish red arrows around the world today as the Bank of Japan news came in within expectations. Do you think the pullback overseas is looking okay, or is it something bigger?
Every time you start a little bit of a pullback after a huge run, everyone's so worried that it's the start of something huge. But at this point, it seems somewhat controlled. The BOJ came out yesterday within expectations. They didn't throw the kitchen sink, of stimulus like the ECB did. So I think the Nikkei is down like 0.7%, and it had a pretty big move going in. And if you look at Europe, Europe's down a little bit across the board, but it just had a big two-day move. You look at the EWG on this chart here, and you will see that it did have a big move from the recent lows here. Like here was your overthrow move down, below this double bottom, didn't quite do a double bottom. Then it broke above this mid-level resistance, came back in the day of the ECB, and now look, boom, right into old resistance. So at this point, I think a small controlled pullback would be good to let the 8 and 21 day, kind of catch up there. And if you look at the FXI, for Asia too, came off the lows above the 8 and 21 day, not explosive, but overall, a bit more constructive than just the complete broken nature that we've seen. But again, it's still below all the moving averages above, so not the healthiest of markets, but so far, a decent move off the low, so it's not really that much of a headwind here yet.
S&P futures are down around 10 handles. How do you think we can keep momentum ahead of the Fed? Well,
probably by holding higher. We have some momentum levels that we're going to watch today, starting with Friday's gap.
Yep.
So if you look here at the chart of the SPX, you will see that we've had a huge move. And then yesterday, pretty much the lightest volume of the year, but we did hold above the 200 day. So if you take a closer look at this pattern here, you will see again, we've been riding the 8-day moving average ever since, we pretty much held it right here after hitting some resistance, from that double bottom lows. So whenever you get into bigger resistance, it takes a little time. So yesterday we opened lower and we were able to work it off. And for today, I would watch yesterday's low, which we're hovering around. If we get a little bit below 2012 and stay below it, there's a chance they try and fill Friday's gap and hit the 8-day moving average, which is now a little bit closer to 1997. But if we could reclaim the low from yesterday, 2012, and go sideways again, that would create a bit of a tight, high-level flag for the Fed tomorrow. And if you look real quickly at the spiders, you will see very similar pattern because that's what trades with the SPX. Where yesterday you did have an inside day. So I feel like if they want to shake things up today a little bit, they bring it below yesterday's low of, actually it's already below 201.77, but they break maybe this 201.35-ish, which is really coincides with Friday's gap, and then you might have a flash or an air pocket, and the air pocket would take you down to the 8-day moving average, which is closer to 1981. So if they want to keep things quiet and intact, we hold 201 today. So let's hope that's the case, because I think some traders are still trying to carry some longs.
How does the landscape across the sectors look to you? Are most still above the 8-day moving average?
Yeah, at this point, they've all been tracking it. There's been a few times when it's like, oh no, it might break it, but it hasn't. So until you get a hard break below and it stays below, try not to be just too heavy short and look for opportunities, because there have been a lot of charts setting up. If you look real quickly, if we go through the landscape, you'll see technology, the Qs. The Qs 8-day is right here. So as long as the Qs stay above this spot, which is around 105.54, you can't get too bearish. If you look at the IWM, the Russell had a feisty move ever since those lows. So, if you look here at the 8-day, you will see that, you have boom, this small reversal candle where it looked like it was going to break but didn't, and now it's flagging again. So as long as this holds, just say 106.80-ish, okay, I would think that this small level gets, kind of tight, and then if we do see more upside, at least it's defined where we can go from there. You do have the IBB, which is hanging around, but not much momentum. It really has to hold this spot, otherwise I think it'll raise some eyebrows. If the IBBs get below this like 252 spot, I think that takes off the table of any kind of bounce. And since Chelsea mentioned oil, let's talk about that real quickly, because that's part of the headwind here. As you can see in the USO, the USOs have been above this 8-day moving average pretty much since where right around here, and that was right around this 875, which is probably around 32 for oil, or maybe even a little lower. And you had your your little reversal here. Yesterday it held by a thread. So today, we'll see what happens into here. But if if this little spot, this 965, doesn't hold and it works its way towards the 21-day, which still, 8 21-day are the momentum moving averages. You're still deemed in somewhat of a strong market with the 8 and 21-day intact. So, I would say this right here is a key spot. Let's hope it bounces off of this, maybe reclaims yesterday's low, which is 976. Otherwise, the oil headwind could return versus the decoupling, which we saw a little recently.
High beta tech stocks were the first to go green yesterday. I'm glad we kind of went over Google, Netflix, all of those. Can you tell us, are you looking at them today?
Well, usually when things are lower, you go for the strong stocks, and we discussed how high beta techs had a bid. Amazon was in there also.
Yep.
And today in the down move, we'll see if they come after them again. Maybe even just for a quick trade. Google, to me, has been the strongest one, but it's just a little extended. My day count rule is 1, 2, 3, 4, 5 days up. That's why I wouldn't be taking that home long, because I just think that, it could be too extended. So with that being said, you could see a move back to here, or let the 8 and 21-day catch up and still be healthy, but as a trader, not the easiest thing to hold. I'm actually long a little Amazon because it was just a little tighter. Yes, it was a little weaker than Google, but all in all, I feel like, we had this small pennant here that it broke above, and then it took back the 50-day for the first time right here, so I thought perhaps, it could work its way back up to this prior pivot, which is around 585. So today, it's down $3. If it can go from red to green, I would think that would help my day. If it doesn't and it breaks, this 568, I'll probably get out of the way and say, what, no big deal. You did mention Netflix, and Netflix gave a quick move yesterday off the open, and now is getting really tight. Okay, this stock, has been pretty broken for itself for a while. I guess here you could even draw this downtrend, right there, and this is from the lows. So it's coming into a bit of an apex here. So it hasn't really led the market, but it's definitely worth putting on your radar, because a strong break and close above this 100 could open the door for higher prices and would probably show an appetite for risk in the market. And if we happen to have hit the market high and we're going to sell up after the Fed, some could look for a short below this 95. So here's your inside range. A break above is a healthier market. A break below, take care, but at least it's defined, and we'll figure out which way it wants to resolve.
And yesterday you posted a chart of Apple on Twitter as it's looking better, and Morgan Stanley just put a $135 price tag on it.
Yes,
so
did
you buy it yesterday?
Well, sometimes I post things and I just put it out there as the offensive coordinator. Sometimes I trade it, and yes, I am long Apple. So the Morgan Stanley upgrade is welcome news to me. And usually when stocks start acting better, it's because people might be accumulating it ahead of an upgrade, and we don't get those here as technical traders. We just look at the charts, and Apple's been acting better. If you look at the chart here, it did clear, that that 98, which was my first spot when I actually said it came back into play, and then it held going sideways for a while. So it didn't look like a blockbuster move. I'm like, what? It held here. It didn't fall apart like it's done in the past. Maybe it gets above this 103.75, which is the recent pivot. It's already above it. And then your next spot, comes in closer to 105, and then all the moving averages aren't up to here. And sometimes it typically runs ahead of an event, which is March 21st. So that, this is helping my morning, because I do have a few longs on. So the Apple upgrade, is helping. What I usually do is I sell, half, pre-market, and then I hold half and figure out if I even add more than I had overnight, to figure out if the demand is there intraday versus just overnight. So if you have Apple, make sure you know which levels it can go to, and it is above the 8-day moving average, which tells you it has started a short-term active trend that's better than this one when it broke it and stayed below it for the majority of the time. So these moving averages do help you. That's why I talk about the importance of them.
Thanks for quiet again yesterday. What are some supports and pivots if they wake up with the Fed tomorrow?
I started looking at them yesterday because if you remember, what ignited the rally in February was Jamie Dimon bought a big stake in his own company, or did a big buyback, or added shares to his portfolio. And since then, they haven't really done much. But sometimes the day before and the day of, they get pushed around, and they are kind of tight. So for me, I am in a little bit of JP Morgan. It's not acting special, but you do have this pennant right here. So with that being said, it does look tight. So if this JP Morgan could hold above, just say 58.50, maybe if they are a little more hawkish than people think dovish tomorrow, it could get going and then get back up to this small peak here. So I think there's a small trade here in JP Morgan. You could look at Morgan Stanley, similar, very tight here, hasn't done a heck of a lot, but if they want to buy something, even though it's been that weak, let me get my little pencil here. I would say as long as Morgan Stanley holds this spot, I drew it a little bad, you stay in there. If it happens to get above this, it could be a little bit better. So that's your snapshot of Morgan Stanley. And then if you want to look at one more, let's look at Goldman Sachs. Goldman Sachs also hasn't done a heck of a lot in this rally, but sometimes it does get a boost the day of, the day before, or after. And if it could take out this little spot here, sorry, let me get my pen. It does seem as if you might be able to get another trade. So we're just like looking for setups that typically give you a high probability risk reward. So if you were long Goldman versus just say 152, perhaps it takes out this 155 and then sees back north towards 160 if they are a bit more hawkish.
Yesterday we cautioned on gold as it's been losing some momentum. Where is bigger support here?
What we saw is on Friday, the metals lost their 8-day. So a lot of guys probably got out. Some guys got shorter than yesterday. I think you said, can you fade the strength? Yeah. And that's exactly what happened. The metals opened up and they went red, and then they had some downside follow through. So if you look at the GLDs, you will see, what was the clue here. Again, I don't want to beat a dead horse, but we talk about the 8 and 21-day moving average a lot because even broken sectors, like gold's been a broken sector for almost 2 years or in a 2-year bear market, they can get a lift. And like right around here, this was your 8-day moving average when it got above and then stayed above. And that was right around 106. And then since then, had a huge move that had to pull back to it. 1 day below, came back above. This day, intraday was below, came back above. Here was wishy-washy on it. This was your first clean break below it. So yesterday, when they were up a little bit, Chelsea's like, maybe you should look at a potential fade. And that's exactly what happened. It went red, broke below this pivot here of 119.36, and now it's at the 21-day. So this is your new pivot. So for gold, I'd write this down. This is 117.50. Maybe it tries to bounce around a little bit here, or maybe does a red dog reversal on it today. I'm not sure. But if it breaks and holds below that, there's really the rest of the moving averages are all the way down here, which would be painful for the gold bugs. But I don't think that happens. I think maybe a little bit closer to this spot, you could buy the dip. But again, this is the pivot and right here was your rationale for getting out. And still, some of you even probably got short on this little outside day. If you remember here, that's when I sold my gold long from this spot. So this never got taken out. So if you had your short in with a stop at that high, you just kept your hands off the keys and got paid. But just shows you can navigate using short-term moving averages.
Do you have any final thoughts ahead of the Fed tomorrow?
I think that yesterday was a quiet day, maybe a little false sense of security. I'm not sure if they're going to shake things up today, but if they are, that means they're probably going to break, the SPX futures or the S&P, the spiders below that 201 area. If you go back to the spiders, you'll see you don't really see it on this chart, but you could go to the 60-minute chart and you'll see that, or go to a 15-minute, you'll see there is a big gap. Okay, that's not showing you that. Let's go back here, go to 15-minute chart. You'll see there is a gap from Friday. So here is support. So if they want to shake things up, look at the open gap there, they'll trade it into this, and that will probably make buying the red in the first hour more difficult. So if you want to write that down for the spiders, let me get rid of this one. Hold on. Get rid of this so we can take a picture of it. Delete. Hey, look at that. Red Dog's starting to learn how to use it. So basically, this is where the gap starts. So right now it's below this small ascending channel on the 15-minute, and here, if this were to hold, chances are a lot of things might go red, and it'll make it easier. If this comes here and starts to break it and fill a big portion of it, chances are it'll raise some volatility, and then the gap fill takes it all the way down towards this 199.80. So here the question is, does this stay open or does it not? And that'll help dictate the trade for today.
All right, everyone, have a great trading day.